Greetings, market rebels. Welcome to this week's sector situation video. I'm Wayne. My partner Ryan is currently working on the market outlook, which will be coming out a little later today. It's Monday, December 6th, about 2:10 p.m. on the East Coast. Just completed macro measure. Let's flash what we need to get started on taking a look at the sectors. There's the old trusty disclaimer. And here's our trusty intellectual property rights notice. Now let's see if I can make the switch to get us to the charts. So you switch over to my main chart. Let's see. And that should do it. So I think we're over here on my main basic chart I try to work with. And so I'm going to go through these a little more, get away from the grid this week and go through these a little bit more finally, because I think there's a couple that are worth doing that on. And that really starts with XLE. And this was a very nice situation here. Fortunately, I think we did a nice job of realizing there could be some kind of a corrective pattern setting up. It started to play out. You could see that technicals were deteriorating. Got a nice pullback to the 100. That 100 held on a few times, but most recently on Thursday. And if we pull this up a little so you can see it better, you can see the RSI line there. That's all working better and better and crossing above 50. So that's starting to look, I think, definitely more constructive. And if it gets above the 50 there at SMA, that wise in gold, it'd be above all of them again. And then maybe it wants to try to come back and see at test levels where it broke down from, so on and so forth. So that at the moment, I think, looks a lot more constructive than other sectors. But we will take a look at some of those as well. One that looks better than is XLK, the technology sector. That you can see a lot like the Qs. Yes, it's holding above this higher low area back in here, but it's below all SMAs and it's not looking good. And we talked about this in the macro measure. Some interesting stuff. I think it's worth looking at the start of that video, but towards the end of the video, I talked about some of the biggest names in the Qs or in the NASDAQ, and they all look more challenging right now, technically. So they are getting near danger zones. We need to see them hold and turn higher if there's going to be an end of the year push, but we could see some tax selling in front of that. So it makes for a very interesting possible week coming up, or maybe you just get listless holiday-esque action like we got on Friday, and that's it. Never can tell for sure. But this certainly doesn't look anywhere near as constructive to me as the XLE. So I'd say, look, if it takes those lows out on Thursday and Friday, just be ready, right, for more downside and possibly challenging the next low down and possibly the lowest low of the year, depending on how things play out. Communications sector that's really had a rough year. It's looking a little bit better overall, though, because it did hold out here higher low. Little better because of being able to put a few better candles together there, I think, but still below trend. The trend is down. You can see all the slopes of the SMAs that are longer term, and the shorties even are down sloping. So it has this work cut out for it if it wants to rally. 20 and 50 will pretty much be waiting for it up about $1.25 from here. So that tells you all you need to know about the upside. Downside, taking out these lows, and there's trouble. You probably come back and you're at risk of testing, or I should say retesting that area. So not as good as energy at all. XLF financials, a little bit more constructive, right? That's holding on to the 150 in rust, the 100 with a nice little 1 day worth of pop. It could probably get above the 50 and 200. So that looks a little bit more constructive, but remember, everything's kind of in this corrective mode at the moment. And until it proves that it's not, right, when in doubt, if you see it try to work its way up and then fail again, and the markets continue, the index averages are moving lower, then of course I would still stick with the intermediate downtrend there. But you could see that this is that drop off in volume, or you could say drop off in interest, right? Because no one seems to be trading at the same clip that they were, right, a few weeks back. Here's the transports, another important sector. They got hit pretty hard, but managed to hold on Friday. So again, how much of that do you want to read into? Usually stocks do find a way to try to rally in front of large American holidays, just the way that it is. They did that is at the start of our Thursday and Friday, the start of a turnaround. Even if they are, a lot of SMAs are downsloping and waiting for them. So again, overall big picture still has work cut out for it. Could have put a little pop together, of course, right? That's why it's so hard here in this final week. We just don't know. And it's kind of a messy situation. So it's hard to have a really strong lean, especially when volume totals are becoming practically non-existent. Here's healthcare, been one of the better sectors for the past few months. You can see that it's certainly done better on the year, right? It's certainly done better on the year than a lot of other sectors, sort of a defensive area, and holding above the 50, which is upsloping, right? So this looks a little bit better. I'd be willing to say, look, let's see what happens if it gets above the 20 there in blue. But until then, right, I'd rather reserve judgment and wait for the market to tell me. And for people that wonder what that means, if you're new to all this stuff, that to me means something like this, where you have to get above a critical level or below a critical level. Now, that might not be super critical, but these are the near-term levels that seem relevant to my eye, and that usually is pretty accurate. Just kind of a simple trend line approach, somewhere near there. So your 10-day there in white is at 136.97, and then you may as well use this 50 because it's so close to the low of that candle, right? So that's 133.79. So if you wanted to get aggressive, you could probably say, well, I'm going to get in right below that support line. That's fine, right? Just treat it as an aggressive entry with a little bit tighter leash on it than something that has a better setup. But the bottom line is, I mean, you kind of need to wait. And that's the problem right now that I see in the market. You can make a lot of arguments on both sides at the moment. In the end, I'd still lean lower if I had a gun to my head, so to speak, because of the long-term trend, and that hasn't been corrected yet. But again, we don't have to do that. So you're better off just waiting. You can see where there's support and resistance right there. It's very clear, we're near it right now. Again, may as well wait for the 20 unless you really have a strong opinion. Nice little bounce here off of the 200 and the 50s rising. And this staples could be right back up there again, but you may as well wait and get above the 20. Getting above the 20 lets you contemplate realistically that maybe they're taking a run at the highs, and then maybe something else happens from there. But this too has acted better overall than other places, right, over the past few months. Let's take a look at XL. Oh, I got something. Somehow something switched up on me here. XLY is the next one I'd like to look at. And the discretionary has been telling a different story. We've been talking about this, it seems like, for a very long time, but it continues to be the case. The best thing we could say right now is that discretionary registered barely below the 30 level on the RSI on Thursday at the close, which means it was lower intraday, nearly touched the lower Bollinger Band. And we could put an aggressive line on here. So if there's a market that's starting to give us that end of year seasonality push this week, that one maybe you could get a little bit more aggressive on. And probably, just to be prudent, you probably should wait for at least to 130.54. But again, if you wanted to play a little bounce candidate, much like when it got oversold here, put a few nice little bounce together, gets oversold here, eventually puts a decent bounce together, that kind of thing, then you might want to keep that 130.50 on as an alert. And then if the market's working, trying to work up, this isn't trying to do it all on its own, maybe there's a little bounce trade there. But overall, you can't like the complexion, I don't think, because you've got every SMA pretty much down sloping, including the short terms, not just the long terms, but the short terms too. So that still doesn't look good. Discretionary spending. Real estate, below all SMAs. The shorties are starting to downtrend more. The others are downtrending. So this would be one I would say that has the pressure on it to hold above that kind of double bottomish low that it tried to string together on Tuesday and Thursday of last week. So that's near 36. So losing 36, and then you're on your way down to the next support level, which again, this is not a big mover, but probably down another 2% from there. And then you're probably down another 3% from there. And then you're at the low. But reminds me of other things where not very good. This counter trend rally finally ran out of steam, corrected. The correction hasn't been horrendous, which is good if you're a bull, but it's got its work cut out for it. So again, the path of easier resistance or lack of support really would be below here, and then you start to really be in trouble. But they're holding it for now, right? So very obviously got to get back above the Wednesday high of last week, or the low from Thursday. One of those two levels, and the market wind you're back in whatever way it's going, and then you might have a little trade on your hands. If you want to trade these sectors, there's probably better action to be had in the components, but some people like their ETFs. XLB, little bit more constructive, I'd say, overall. It's above some of the SMAs, but still below the 200 in purple. Shorties rolling over, right? So materials, have been doing better. Not a horrible correction, but for me to really start feeling better about them, I definitely would love to be through the 20 for sure up there in light blue. That would tell me, hey, there's something, maybe this is really legitimately fixing it. But that would probably be in a pretty positive market. That would close the gap that was left after that day right there, which is 12.14, so on 12.15. And it would start to put you near a flat line that would be important to get back over. But again, nothing great. I don't see anything great there. Kind of like you're consolidating after a pullback. We don't know if it's a bullish pullback that resolves to the upside, or it's just the first leg of a longer or more significant correction, more significant pullback. So again, just let the market tell you what to do when you're is my way of handling it. When you're in a situation like this, you can cheat your way in a little early, but just realize that you are cheating your way in a little early, and you really haven't broken out or broken down. And so you can't get too enamored, right? Unless you've got other factors you're using with where you are. You've got to wait for these breakouts and breakdowns, and then they become more significant. Now, if you want to front run them, that's great, but you got to have great discipline to get out if that front run scenario starts to fall apart quickly. XLI industrial, certainly one of the better sectors over the past few months, no doubt about it. We said probably got overdone, needed to have a little bit of pullback. We noted that some RSI divergences were forming, SMAs were flatlining, and that's happened the last couple of weeks. But it did support nicely at the 50 there in gold, held, and now closed out on the high note really on Friday. But again, holiday-esque, holiday influence trading. Again, I'm waiting for the 20 there in blue. And at this point, you may as well say below the 50, which is effectively like saying below Thursday's low, which again, market doing risk off, that's an easy signal to take. Market doing risk on with the seasonality at the end of the year, this might not be as easy because the long-term trend in the market was still down as far as we're concerned. But certainly the way it's been acting on its own, I would not hesitate to trade it that way. Especially on the short term trading, right, where you're not committing to it for a long time. Utilities, Utilities, as Ryan likes to say, the mixed bag baby, right? You're in the middle of all the SMAs. You're in the middle of the high and the low here, right? It's just a jumbled mess. And so, they probably don't know what to do because they maybe don't know the direction of rates. Look at the volume totals here, right? This is really a lack of interest. So don't want to read too much into that anyway, just because, look, that's just not that great. I mean, XHB, home builders, a lot like XLU, really. So wait for that to resolve. Below the 50 there in gold, or the light blue is the 20. That's that's what I'd be looking at. Again, it makes no sense in my mind for home builders to start rallying, but I'm not a home builder expert or anything like that, but just in general. But you got to go with the action to profit. Again, we always like to check the metals. XAU, I still think these continue to look a little bit more constructive overall. You can see that this little low here that is experienced late last week and slightly a little bit prior to that, still a little bit better than here, even though it lost the support line it was on. SMAs like the 50 and 100 already moving higher in terms of the slope moving up. And so holding on to all SMA support, including the 200 in purple. So it's hanging out pretty solidly. And on a bigger picture view, we've noted this, that we think there's some strong potential here. But again, we always have to iterate. We've been calling it, I think, more positively because you have to. When it's acting better, it appears to be better. And I think there's some really good potential there. Full disclosure, I'm long gold and silver. So just want everyone to know that, but I like this. Technically, I'm always talking technically and just trying to be objective, whether or not I'm involved or not. So I think that looks pretty good. And the bigger picture view on that also looks good. But remember, that is a notoriously difficult sector at times to get involved with. Let's take a look at crude, if we can. Crude, much like XLE, crude is also looking a little bit better. Higher low got put in there versus here. High got taken out, closed near the highs of the week. Needs to start working its way back up through these downsloping SMAs, the 50 and 100. And then we see what happens from there. But overall, right, this can be influenced by news very quickly. We all know that. So just be ready. This was nice because it got overdone outside of Bollinger's. And like I said, this is that kind of real quick march back that I like to see. I'm not a big counter trend trader. I prefer to be in a bull market, trading the corrections inside a bull market from the long side. So after a pullback, I like to go long in a bull market. I think it's the easiest part of trading, in the easiest, I guess, phase, right, that you're in. I know some people don't agree with that, but that's how I look at it. And this was a nice little mild pullback off of that pop. So this is looking better, rounding up, got to give it its due. And then we're looking at copper. If it lets me, it might not let me, I'm not sure. We've had some trouble here and there with copper. Copper continues to flatline, maybe a little bit better, right? It's worked its way up a little bit, maybe, but I mean, you can see there's a consolidation there, and we should just draw that now that I've noted that, because I just don't know how many experienced folks are in here, whose eye catches what. If you're newer, hopefully this little simple things help out, but I mean, I think this is what your eye catches, and you can see that that's coming. We talked about this in Apple, and it was good to keep an eye on it a few weeks back because it was kind of tracing out a triangle, and it was nearing the apex of the triangle. And so this is getting towards that, where these lines would cross. And at that point, right, you're going to see either breakout, breakdown in theory, and it could be significant because when the volatility constricts like this, usually volatility has its phases, right, where it constricts and the old mean reversion, and sometimes it gets really interesting, right, like in a strong push like that. But overall, I think this looks a little bit better. So I would just be ready for that. Don't know what that portends. Just saying, I'd be ready for that in any stock that you have that's affected by that, it could help or hurt that stock. So what else do we have? Oh, lumber. Let's take a look at lumber, and we can get the January lumber. And this is looking a tiny bit better too, right? It's trying to cross back up. Maybe gets to the 20 there in light blue, and let me fix it because I wanted to fix this a few charts ago when Thinkorswim flips it over on me to percentage instead of price. But you can see that 20 is the big deal to let it, I think, release it to try to work towards the 50, and there's some space between. So that could be interesting. Don't know. I mean, maybe that's the anticipation. The Fed stops a little bit shy of what the market is expecting in terms of the rate, terminal rate. Don't know, but a little bit of a sign. Obviously, the long-term trend, incoming trend, is still down, right? Until proven that until we see a proven trend break, and we certainly haven't seen that with a new low being made earlier last week. Trying to think. Oh, XBI, we can take a look at. I'm going to try to be thorough for everyone that gets something out of these videos. We've said this many times, switch the percentage, but doesn't matter. Just kind of dead in the water, right? We've said this is that wake us up when it gets below. Maybe you start waking up when it gets below 78-ish, and then wake us up when it gets maybe above. Let's see, what's the open there? 85. So 78 to 85, and otherwise don't wake us up. All right, this is, I guess this is probably, if you could get enough premium in here and there's enough liquidity, I guess premium sellers and iron condor players, credit spread players must be loving this action in here, but probably the volatility reflects that. What else can we look at? Trying to think if there's anything else we can take a quick look at that might help out. Oh, did see some action in things like LQD, IYR. Saw some action in there, and then HYG. So what I mean by that is that the UOA team, Mikey and Chris, working with the algorithm, they spotted some stuff last week, and they also spotted it in IWM and SPY. Some pretty big stuff was trading. Just want to note this for sector situation viewers, because covered it in macro measure briefly, but the bottom line is that when I've seen this kind of, let's say, across the board hit in these things, it's either been right before a significant leg lower or right before a significant bounce. So usually when the big players step in, their timing's pretty good, and you have to be ready. Now, obviously, we're approaching a holiday week, and maybe nothing comes of it this week, but there's been some pretty significant ETF activity, in major index ETF activity as well. And I think that's telling me that they're expecting something soon. Might have to wait until the start of the new year, but I just wanted to let everyone know. And maybe it doesn't happen, but it's, like I said, it's been a pretty good tell to at least be ready to make your moves, which could be good for us, right? Because we're looking for movement. We're looking at, in most of the stuff we do, we're trying to capitalize on movement and potential and so on and so forth from charts, and good things like ATRs and all the rest of it. And if we can get a nice little trading week this week and start the new year, that would be great. I think it's been a challenging trading year, but if you look at SPY, I think it's also been a year with opportunity, because this, if you look at this from the start, there's been a lot of back and forth, up and down. So not easy, not by any stretch, but still there's been, I think, a lot of opportunity. I mean, I would, if someone said, well, I can't guarantee a roaring bull market or a horrendous bear market, but I can guarantee you that you're going to have this much movement over the course of the year, I would say I'll take that every time, because if you're willing to be agnostic or not really care to be a bull or a bear long term, and you're more about what's happening in the here and now and putting that within context, I think you can still get a lot of nice swing trades rolling during a time like this, or times like this, I should say. So I hope something I've shared with you helps you out this week or in the future. And I'll see everyone through the webinars. I think we're doing a special Market Rebellion webinar in the near future. And well, I think we're doing a cocktail hour to end the year. So hopefully we'll see some folks in there. And I want to wish everyone a great new year and a very safe and happy and healthy holiday season. So thanks for tuning in.